and welcome. Moss Adams is pleased that you joined us for today's webcast, Single Audit Overview, Uniform Guidance, and Common Findings. Before we begin, I'm going to play a short video.
Welcome, and thanks for joining. We're pleased to present our continuing professional education webcast series. Before we begin, please keep the following in mind. You can customize how you view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can adjust window size and placement or enter full screen mode using the controls at the top right of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons that relate to a different aspect of our session. You can download a PDF of today's slides from the Slide Deck and Handouts widget. You can ask questions by typing in the Q&A window and clicking Submit. We'll do our best to answer all questions or follow up via email. If you experience technical difficulty, refresh your browser by hitting the F5 key. Today's session offers 1 CPE credit. To receive credit, you must meet the National Association of State Boards of Accountancy requirements. You must attend at least 50 minutes of the session and respond to at least 75% of polling questions. To participate in the polls, please check the button next to your answer within the slide window and click Submit. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry if you can't download your CPE certificate today. We'll email you a copy in 2 weeks. If attending this webcast in a group, you must complete our group CPE attendance sheet, available in our Slide Deck and Handouts widget to receive credit. Please have all group members sign it and send only 1 sheet per group. CPE credit can only be awarded to participants registered as themselves and isn't available for participants who view the on-demand version. This presentation is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
And now I would like to introduce today's presenters, Hilary Tanneberg and Matt Dinsdale, both senior managers here at Moss Adams. Their bios and contact information are located in your console if you would like more information. And now I would like to turn the floor over to Matt to get the presentation started.
Thank you, Danielle. So in front of you is the agenda. Today we're going to start off with a single audit overview, talk a little bit about the basics, what a single audit is, and then we'll talk about what to expect with your first single audit. With all the new funding out there, it's likely that some of you attending today's course may have a first-year single audit, first-time single audit. That's what we just want to go through those basics. We'll talk about some of the new grant funding that's out there that a lot of organizations and state and local governments are taking advantage of, both related to COVID and the Infrastructure Act. Then what would be a single audit CPE session without some discussion of some common findings and some common pitfalls? We want to make sure that you all are learning from mistakes others and not making them yourselves. You can prevent a lot of issues if you just do a few simple things, document a few things. So we'll make sure we cover that at the end. All right, kicking off the single audit overview. So what is a single audit? So a single audit was created out of really an act of efficiency. So before the single audit was enacted, there were a lot of federal agencies going around and auditing organizations and state and local governments and recipients of federal grants. They eventually realized that, hey, a lot of these state and local, a lot of these grantees, I should say, are already being audited as part of the financial statement audit. Why don't we just combine the two? So the Single Audit Act was born. And now if you have a federal funding, there's a good chance that you'll undergo a single audit, which just means an organization-wide financial statement and federal awards audit into one. The federal agencies use these to assess the recipients of their federal awards to make sure they're following the rules. And if they do get tripped up with findings and whatnot, that they're addressing those and improving their processes and moving on and doing bigger and better things. They also use the single audit as a broader test of some of the issues out there on a broad basis, and those can work into the annual changes to the compliance supplement and help them understand what additional monitoring might be needed to their grantees. So a single audit and federal compliance more broadly is determined by a few things. Here you see the OMB Circular A133. That was the original act that came into effect in the 80s, which was then amended with the Uniform Guidance. The Uniform Guidance, actually this is the 10-year anniversary this year, but adoption of Uniform Guidance, which provides a central source for all federal regulation relating to grants and spending on those grants and procedures and processes that need to be followed when operating a grant, as well as providing guidance to auditors and rules to auditors on how to perform a single audit. The compliance supplement is the annual document that the White House puts out every year, which compiles all the instructions from the federal agencies on how to perform a single audit. So this can be the culmination of the federal agency, reviewing all the previous year's single audits and finding out what some of those issues are, and then adding procedures or adding tests to perform for their grants. But year to year, there's not a lot of changes broadly, but every year there is some review that needs to be done of this on an annual basis to make sure that you're taking into account any kind of new rules and steps. The 2023 compliance supplement actually just came out this last Friday. So any of you that aren't aware of that, that's a good place to look at to get an idea of what auditors will be doing this year on the audit. The AICPA puts out the audit and accounting guides, and those are always a very good resource for performing single audits, as well as understanding what a single audit is. They have a guide related to the single audit too, so good resource there. And then of course the federal agencies put out ad hoc guidance and rules and regulations, and they're always the ones that, since they're the ones providing funding, they're the ones that are determining what some of these tests that we're doing are. All right. So here's a short list of some of the more popular types of federal awards. So as you can see, they can run anywhere from student financial aid to legal aid to Head Start, transit. The federal government funds a lot of different programs. It's also important to understand if you get a grant and you're running a program that's funded by maybe a state or maybe a local government or maybe an organization, a nonprofit organization, and those funds aren't directly received from the federal government, they may be federally sourced. So it's important to look at that grant agreement and talk to your grantor to see where those funds originally came from. The requirements of the single audit will follow that funding all the way from the federal source down to the end recipient. And whoever is using those dollars must follow those federal regulations, even if they didn't receive it directly from a federal government, federal agency. All right. The threshold for needing a single audit is $750,000 in spending. I just want to repeat that. That's $750,000 of spending, not cash received or revenue recorded. It's the dollars spent in a single year that will add up to that $750,000 and require a single audit. So what is a SEPA? So the schedule of expenditures of federal awards, you'll frequently hear this when it comes to single audit. This is the basis for the start, planning, selection of major programs. It's really the kind of crux of the whole audit. This determines this determines what we're testing, and it's also reported with your financial statements when you receive the end reporting on the single audit. So we'll call it a SEPA, it's just a lot shorter. The SEPA is prepared by management. So management will go through and kind of scrub their general ledger, look for grants that they've received, talk to folks around the organization, and after they determine all of the federal grants that they have, they will look at that spending for the year, for their fiscal year, and place it on the SEPA. There's also some other required items that go on the SEPA. The assistance listing number goes there. The grant number goes there, the name of the grant, the federal agency. So there's a number of items that are required to be included on the CIFA. It's good to look at the uniform guidance to understand what those items are. It's also important to know that this should reconcile to your accounting records. That's actually part of our opinion letter that it says that it reconciles to the financial statements themselves or the documents used in preparing the financial statements. So make sure it reconciles. It may not need to tie directly to a number in your financial statements, but it should reconcile. I'll take a moment here to also talk about what a preliminary CIFA is. So many times the auditors will ask for a preliminary CIFA. This is important really early on before the year closes. We use it to determine what those major programs might be. So the major program is a term used by us as auditors to identify what programs are being audited. So not all programs on the CIFA are audited, just the major programs. And we use a formula. I won't go into detail of it, but we do use a formula to determine what those major programs are. So a preliminary CIFA is requested. Maybe if you have a June 30th year end, maybe it's as of March 31st or April 30th. And those are projections. So we ask for projections of what the spending will be on those federal grants as of year end. And that will help us determine which programs will be audited, which will in turn help us determine how many weeks, how many days of audit time needs to be scheduled, how much planning time needs to be done, how much risk assessment needs to be done. So it's very critical that you use the best data possible to prepare that preliminary CIFA. The worst thing that can happen is that that preliminary CIFA is incorrect, the numbers change at final, and then maybe we tested the wrong program. And there's nothing we can really do about that. As auditors, we would need to test a different program, the actual program that's required to be tested. So again, it's just important to understand and report the most accurate information you have on those preliminary CIFAs. Right? It's important for those CIFAs to be complete and accurate to avoid missed programs. It's also, I'll cover this in another slide, but we have to provide an opinion on that CIFA. And the auditor is responsible for determining whether the auditee includes all required CIFA elements. Okay, as part of the final reporting on the single audit, there are a number of documents auditor documents that are included. So we provide an opinion on 3 different items with the single audit. We provide an opinion on the financial statements. We provide an opinion on the CIFA in relation to those financial statements. And then we provide an opinion on compliance with federal compliance requirements for the major programs. So we don't provide an opinion on compliance overall, just on those programs that we tested as major programs during the audit. We report on a couple other things that we don't provide an opinion on. So we keep the opinions on on internal controls to the SEC audits. Although we do test internal controls as part of the single audit, we do not provide an opinion on those. So some of those areas are controls over financial reporting. That's just your financial reporting process and those controls, cash reconciliations, review journal entries, things like that. Controls over compliance. So that's reviewing grant costs to ensure the compliance, maybe documenting procurement procedures, reviewing those. We audit these, but we do not provide an opinion on that. A corrective action plan may be included in the final audit reporting if there are findings, but we don't provide an opinion on the corrective action plan. Same with response to the findings. I'll go over this in a later slide, but the findings do require a response to those by management, and we do not provide an opinion on those. All right. So here's an example. After we determine what major programs are to be tested, and maybe let's pretend for this example we have research and development as a program to be tested. We would then look into the compliance supplement that's released annually and determine and also look at the grant agreement and talk to management to determine what areas are what we call directed material. Those are areas that we test. And as an example, research and development grants, we may test the following areas as part of that. So period of availability, looking at the if the period the grant is being ran, to make sure costs are incurred within that period of availability. If there are matching requirements on that grant, we would test those. Cash management. Your auditor might test cash management, which is, are you managing the cash you receive? Are you putting it in your bank account? Are you claiming costs that have been incurred? Or if you're on an advance basis, are you spending those dollars quickly? Subrecipient monitoring. That's an important one. If you have subrecipients, your auditor is going to look at those, how you're monitoring them. If you have equipment, your auditor will look how you manage that equipment. If there are reporting requirements, the auditor may look at the reporting. Procurement, we'll talk about that in a little more detail later, but that may be an area of testing. Allowable costs and activities are typically one of the larger areas of testing in many grants, and this just relates to spending on those grants. So salaries, if you have indirect costs, if you have, example of R&D, you have core facilities, cost transfers, other disbursements. That's typically on spending grants. You'll see a big portion of the audit relates to just testing those dollars spent. And then, of course, the federal agencies have the option to add in additional special tests if they feel there's a test that needs to be ran on a specific grant that doesn't fall into one of these areas. They can add that to special tests. All right. And a quick comment on cost characteristics. So when you're looking at a specific cost that can be charged to the grant, three things that your auditor will look at, and the three things that you should look at as the one that is charging that cost of the grant, is whether that cost is allowable, allocable, and reasonable. So allowable is just very black and white. The text in the compliance supplement and the text in the federal regulation, is that cost allowable? Use an example of maybe you have a grant and you bring your team out to dinner, and as part of that grant, you would maybe have a couple beers or a glass of wine. That alcohol is not allowable. There's a strict rule against that in the federal regulations. So you cannot charge that to the grant. So again, black and white there. Allocable. So some costs may be allowable under a grant, but they're not allocable. What allocable means is essentially it's used for the purpose of that grant. It can be allocated to that grant. So maybe you have a dinner and it's allowable. Maybe there's no alcohol in it, but maybe it was used for one grant, not another, but it was charged to this other grant, and it's not allocable to that grant. So it needs to be allowable and allocable. The third one is reasonable. A cost can be allowable, it can be allocable, but maybe it's not reasonable. Maybe the text of the rules say it's allowable, but it's really not a reasonable cost for that grant. And so you have to put it through the lens of all three of those to determine whether or not it should be charged to the grant. All right, now I'm going to toss it over to Hilary, and she's going to talk a little bit about what to expect with your first single audit.
Thank you, Matt. And we're actually going to go ahead and kick it off with a polling question. Lauren?
Thanks, Hilary. The first polling question: has your organization previously been through any of the following audits? A, financial statement audit. B, single audit. C, program-specific audit. D, review engagement. E, never been audited or review. I'll give you a few minutes to respond. To respond, please click the button next to the answer you choose and hit submit. If you can't see the submit button, please enlarge the slide area. And as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. It looks like they're coming in, so we'll give it a few more seconds here. Okay, here we go.
Great. So it looks like a majority of you have been through some sort of an audit, but hopefully this presentation today will just continue to help you understand the process. So in speaking to that, I want to touch on what the audit process looks like. And what I would like to point out here is a few key areas that you at your organization will be involved in. So the first one listed is the identify client staff for involvement. So once we're engaged and we're moving forward with the audit, we need your help in identifying who will be involved in the audit so that we know who to communicate with, who we'll be inquiring with and doing control walkthroughs. So that's always important that you're able to provide a listing of those client staff. The next item is the preliminary CFA. As Matt already pointed out, it's very important that this is complete and accurate as possible at that point in time, as it's going to drive the rest of our audit process, which, as noted on this slide, drives our major program determination, and that's determining what major programs we're actually going to be looking at and testing. From there, the auditors will perform a risk assessment and determine the direct and material compliance requirements. We will then schedule calls and meetings for control process walkthroughs. And what this will involve is the client staff that you've identified as applicable for this major program is meeting with us, and we walk through the process of how invoices or whatever the compliance requirement that we're looking at, but how invoices move through the process of getting approved and paid, and also what the review or control over that process is. And so typically that's again, phone calls or in-person meetings with all the staff that are involved. Once we've done our control process and walkthroughs, this will help us identify which controls are considered key controls and need to be tested. And this also helps us identify what documents to request to help us apply and perform the testing of those compliance and controls. So when we actually move into the testing of the compliance and controls, we'll be requesting sample documentation from your organization where we'll start looking at the information, looking for controls. So that's another area that would involve people from your organization's help. We'll then conclude on compliance. We'll consider any findings. If there are any findings, we'll be sure to share those with you so that you're comfortable with what's in the finding and that you agree with the finding. From there, we'll move into our reporting. And then finally, the data collection form. So this is the form that's required to be submitted to the federal government after you've completed your single audit. And it's very important. This is due within the earlier of 30 calendar days after receipt of the auditor's report or 9 months after year end. So ultimately, this is the way for the federal government to track if you did, in fact, get a single audit and what are the results of that. So the data collection form is more or less a regurgitation of a lot of the information in the financial statements. However, it's in a separate form, and then you attach the financial statements. So how can you prepare? So from an expenditure standpoint, the big key here typically is allowable costs, as Matt talked about. And what is important here is that you're tracking those allowable costs and that they're reconciled back to your CFA so that we have a complete population to pull our sample from. You also want to make sure that those accounting records do support what's on your CFA, as well as any reports that go out to the federal agency or other third parties. Again, want to make sure that the accounting records are supporting those items. So consider the expenses you are claiming, and this goes back to what Matt was talking about of understanding what you've charged and making sure that it's allowable under that program. So looking through your population and making sure that everything in there seems allowable, allocable, and reasonable. And the last bullet point, performing a thorough review before bringing it to the auditor. If you find, what I always tell people is if you find it first instead of me finding it, that's always a lot better. So if before you provide a sample documentation or populations, make sure that you're looking at that information and verifying that what is in it is correct. And if not, that you let the auditor know ahead of time so that they're aware of it prior to their testing beginning. A few audit considerations. We'll go into detail on these in future slides. But again, a couple key areas, allowable costs and activities. So making sure that the expense is documented, which would include invoices, receipts, purchase orders, checks, bank statements, all those types of items to support that expense to make sure that it is allowable and we're, as auditors, able to see it. Ensure that you have documented controls, either via a signature or electronic signature or a tracking sheet that you use for approval of such items. And as a reminder, the controls can be documented through a transactional basis, meaning every invoice is approved, or there can be a summarized basis, such as a review of the cost reporting at the very end. Procurement and subrecipient monitoring, there are very specific requirements around your due diligence in this area. So for procurement, again, we'll talk about this in a few slides, but there are very specific dollar amounts that drive how you're able to contract with vendors, depending on how much you've spent. So really understanding those different levels. And then subrecipient monitoring, the three main areas here are identifying the award and applying the requirements, evaluating risk, and then monitoring. From the auditor's standpoint, this is probably our favorite saying: if it isn't documented, it didn't happen. So it's very important that anything that is going on as far as a control or even a process, that it's documented. So from a compliance standpoint, we're going to be vouching expenses back to that documentation. So if you don't have the invoice to support the expense, it's really hard for us to say, yep, that's allowable or eligible for being charged against the grant. And so we're going to actually pull those documents. We're going to physically inspect those for the various items. Memos are also helpful. Flow charts can be helpful. So just making sure that from a compliance standpoint, we're able to have some sort of supporting documentation for the compliance requirement that we're looking at. From a control standpoint, making sure that those invoices are signed. And I also like to add in there that they're dated so that I know that it's happening timely. It could also be an email or, again, a memo. Or if there is something that has to be approved from the federal agency, making sure that you have that documentation, as well as understanding what a control versus a process is. And we'll dive into that again a little bit in a few slides. A few other concepts. The sampling, we get this question a lot. Why do you have to look at so many transactions? Well, our sample size is really driven by our standards that we have to follow. And so depending on the complexity, our risk assessment, or the size of the population, the sample size is already predetermined based on those items. So in order for us to fully provide an opinion on compliance, we have to look at a certain number of samples. And now I'll pass it back to Matt for an overview of new grant funding.
All right. So in the past couple of years, there's been a number of new programs established related to the COVID and the COVID response to help out a lot of organizations and state and local governments that were largely impacted during the pandemic period. There was also in late 2021 the new bipartisan infrastructure law that was established and signed into law, and that's going to be providing a lot of funding to different programs, existing programs and new programs going forward. So we'll go through a few of those. So the one in front of you is the Charter Venue Operators Grant. This one is probably going to be the last. This year will probably be the last year you see this funding from or at least audited, anyways. The funding typically stopped being spent in 2022, but it will go on from CFAs this year. And what this did is provide funding to venues, bands, and other providers of live entertainment that were closed down during the lockdown period. SLFRF, the Coronavirus State and Local Fiscal Fund, Recovery Funds Program. This was provided to state and local governments to help fight the pandemic, maintain public services, and to support long-term growth and opportunities for those different agencies and governments. This grant in particular is providing a lot of funding out there. It is actually pushing a lot of state and local governments into the $750,000 realm that will require them to undergo a single audit for the first time. For those, there's an attestation option that was provided by the federal agency to help ease that. So this program alone doesn't require them to go into a long, lengthy single audit process. And so if you are one of those that may fall under that, I would urge you to check into that attestation option to see if that applies to you. For that program specifically, as auditors, your auditors will look at the spending on that grant. So that this grant mostly revolves around just spending dollars for the purpose of it. So support public health, address negative economic impacts, replace lost public sector revenue, premium pay for essential workers, invest in infrastructure. Those are the type of costs that your auditors will be looking for when they audit this program. And this program actually runs through December 31st, 2026. So this may show up on the CIFA for a number of years and may be subject to audit for a number of years. There's also some reporting requirements around it. So keep an eye out for those. And one important consideration related to this program is determining whether or not funding provided to others is classified as a subrecipient or a beneficiary. That's a very important consideration that's long time been made in the federal funding kind of arena, but it's kind of come to light a little more as part of this program. Whenever you provide funding to a third party, you want to make sure you understand whether they are operating a program themselves. Is that a subrecipient relationship? So you have to monitor them, or are they the end beneficiary of that funding? And you would not have those monitoring requirements as part of that. The third big program out of the COVID era was the provider relief funds, and that was provided to provider medical care. So you're seeing a lot of hospitals and doctors receiving these funds, and it's essentially to cover eligible expenditures and lost revenues during that period of time. One thing to note on this is that the spending on this grant doesn't always follow the fiscal year. So I'll make a side note on that. There are a number of federal grants during this kind of COVID era that did not follow the normal requirements to go on a CIFA. So normally a CIFA will report expenditures according to the fiscal year and when they were expended. So if a cost was expended during the fiscal year, they would go on that fiscal year's CIFA. If you're a cash basis versus an accrual basis reporter, that would follow whatever basis your financial statements are in. However, a number of programs, including this one, require that you put it on a different year, depending on certain requirements. I won't go into that here because it's pretty lengthy and detailed. But if you do have this funding, I would make sure to double check the rules around when they go on the CIFA to make sure you're following those rules, because they don't follow the normal CIFA requirements. And now the bipartisan infrastructure law statistics. So this program, this law provides a lot of dollars to a number of different programs, and it's constantly those new programs are constantly being introduced. So there is a broad mandate for funding of different areas, right? So infrastructure obviously was part of that, but also there are other areas in there as well. And those trickle down to those agencies, and those agencies either created new programs or they funded existing programs. So I believe I checked in mid-March of 2023, and there were about 382 programs funded so far, or $840 billion. 132 of those are new programs, and 231 are grants. If you check the federal government's grants.gov website, you can see what programs are posted to be eligible for application at any specific point in time. So if you're interested in funding under this program, I'd suggest looking there to see what kind of programs are eligible to be applied for. There's also good. It's also a good idea to look at the White House guidebook and the Senate summary guide. Those are two documents that were put out by those respective entities that helps you understand the different types of funding and what they are and what those dollars are to be spent on in the future. All right. So now we're going to talk a little bit about common findings. First, Danielle, I believe we have a polling question.
Great, thanks, Matt. Polling question number 2. What area do you feel the most improvement is needed before processing with an audit? A, internal controls, B, documentation, C, staffing to support an audit, D, education about the process. I'll give you a few minutes to respond. Please click the button next to the answer you choose and hit submit. If you can't see the button, please enlarge the slide area. For those of you that would like a copy of today's slide, you could download them from the folder that says slide deck and handouts. We will also be sending the slides by email tomorrow along with recording of the webcast. As a reminder, if you would like to receive CPE credits for today's webcast, you'll need to respond to at least 3 of the 4 polling questions. And here are the results. Back to you, Matt.
All right, thank you. All right, so we're going to, as I mentioned, we're going to talk about some common findings. First, you should understand what the elements of a finding are. So when you have a written finding resulting from the single audit work that's performed, there are required components of that finding that are supposed to be included in it and written text. Include all of them here. We've got criteria, conditions. If there are question costs, those are required to be included as well. Just because there are no question costs doesn't mean it's not a finding. So many findings don't have question costs. Context of that finding, the cause and effect of that finding, and then the recommendation. The auditors will typically provide a recommendation. I recommend you work with your auditors to make sure it's a good recommendation, right? You want something that's useful and helpful, and something when the federal government follows up, if it does, they want to make sure that they're looking at the right recommendation. And then, of course, you as auditee are required to essentially provide your understanding, your view of that finding. So typically you would write something like you agree with the finding and you have a plan to put a certain procedure in place or adopt a certain policy to correct the issue. I'll just pause here that it's important to make sure that you agree with your auditors, right? You don't want to have an adversarial relationship. The auditor is there to do a job, and they're required to audit certain things, and they're required to report certain things. If they're finding an issue, and it is an issue, I would recommend making sure you have a good discussion with them to determine whether or not it should be a finding and whether the information reported is as accurate. All right, and actually, I'll make an initial comment here on the slide. There's really 2 types of major findings. There's internal controls over compliance finding, or internal controls over financial reporting, or there's a compliance finding. There's other findings too, but those are the most common that we see. But the federal regs require certain other issues that like fraud or waste to be reported as a finding as well. So if there's any of those more uncommon matters, they may show up as findings as well. But the most common are control matters and compliance. So a lot of times what happens is a compliance exception has occurred. So let's take it back to like the previous slide where we talked about the dinner with the glass of wine. That may be a $50 charge, which clearly is probably not going to be material in those situations. But it does indicate as an underlying internal control issue, right? Somebody did not review that receipt and charged with the grant, or maybe they reviewed it and it wasn't good enough review. So that internal control matter now becomes the finding, despite the fact that maybe it's not a material compliance issue. So just because, and also to increase that, just because there's not a compliance issue, there may be a finding. If there is no review of costs, maybe all the costs are perfect and allowable, but if there's no review of those costs, that may be a control significant deficiency or a material weakness, a reportable control matter that needs to be included in a reporting, despite the fact that maybe all the compliance was met. So just keep that in mind that you can be tripped up on either the compliance side of things or the control side of things. All right, and here we listed some common findings that we see from time to time. So, excuse me, financial closing reporting is a very common area where we see findings. This is not related to compliance, more so it's related to the Yellow Book internal controls over financial reporting issue. So if you're not reconciling your accounts or you're not closing your books timely, you may have a finding related to that. Allowable costs can also be a common area of finding. If you have as I mentioned, if you have an unallowable cost, those can result in findings. Capital projects can also be a common area for findings. If you're a state or local agency and you have a lot of construction projects going on, if you're not coding those costs of the correct project, that can result in adjustments that are needed, or maybe non-compliance if they're funded by a federal agency, resulting in a finding. Reporting is another common area of findings. There oftentimes are standard federal reports that are required to be submitted, but sometimes there are other additional supplemental programmatic reports that are required to be submitted. So it's important to look at your grant agreement to ensure you've captured all the reporting and you have some sort of triggering calendar appointment or something that tells the folks preparing the reporting that they are there's a report due and it has to be reported on time. Documentation is as auditors we always say documentation. All these all the federal compliance rules can be performed. You can meet all those rules and requirements, but if you don't have documentation supporting that fact, then it's hard for your auditor to validate that. A good example of that is subrecipient monitoring. If you're not documenting the fact that you're reviewing your subrecipient single audit report or monitoring them on a regular basis, depending on what the necessity is, the auditor cannot validate that, and you may have a finding there. Same with procurement. Hilary mentioned procurement is kind of a complex area. A lot of times what might happen is that you do follow the rules for procurement, but you then document your maybe assessment of bidding or you didn't retain invoices or quotes from competitors, and now you can't support the fact that you perform those procedures, and you may have a finding there. I'll skip over procurement rules because I think Hilary kind of addressed that. But overall, just make sure your procurement folks, your purchasing folks are fully aware of those federal rules. There are also a lot of states that put in rules as well for procurement. So make sure that you're taking into all the laws and regulations into account when you're training your procurement, your purchasing staff. All right, state and local laws shouldn't be ignored, right? We talk a lot about the federal laws and regs, but state and local laws also apply, and they can create a finding if they're not followed. The broader requirement of the Yellow Book audit requires us to look at laws and regulations, and if these aren't being followed, they may result in a finding as well. And then lastly, prevailing wage. Some construction projects require prevailing wage to be paid out, and there are specific requirements around that. So if you have a prevailing wage contract, make sure that you're documenting your considerations of those prevailing wage payments. All right, and now Hilary's going to wrap it up with a discussion around some common pitfalls.
Thank you. Yes. So some things that hopefully we can help you avoid. And so we're going to start off with some best practices. We have talked a lot about documentation, so I'm not going to continue talking about that. However, the second bullet point notes train staff involved with federal grants. And what I would say to this is make sure that the people that the auditors are going to be interacting with, but also the people that actually run those federal grants, have an understanding of the compliance requirements specific to that program and understanding what the auditors are doing, what's the point of the audit, and some of the questions that we'll be asking. A lot of times, the personnel outside of the business and finance office really don't understand what the auditors are doing. And so it's hard for them to, really get a full grasp of some of the questions we're asking. So again, training your staff that are involved with the federal grants to at least have a baseline understanding of the compliance requirements and what the audit will be accomplishing, We've talked about the CIFA. We've talked about controls and processes. We'll dive into that in just the next few slides. We'll walk through control versus process. Interacting with your auditor, communication is key here. Interacting with your auditor. So communication is key here to discuss the timing, the audit plan, when we'll be testing, when we plan to wrap up. If you don't understand what we're asking, making sure that you're reaching back out to the auditor to make sure that you have a full understanding. We've talked about identifying key members. And so the last item, other areas, is a suggestion to read through the compliance supplement, in particular, the major programs that the auditor is looking at, because this is really going to help you understand where the auditor is coming from and the specific key areas that we'll be looking at and asking questions about. It can really just give you a great baseline of understanding of where we're headed from an audit standpoint. And next, we have another polling question.
Great. Thanks, Hilary. This is polling question number 3. How many findings do you receive during your 2022 audit? A, none. B, 1. C, 2 through 5. D, 6 through 10. E, 10 plus. I'll give you all a few minutes to respond. And to respond, please click the button next to the answer you choose and hit the submit button. If you can't see the submit button, please enlarge this slide area. If you do have the option to submit questions for us, please do so by using the Q&A window. As a reminder, if you would like to receive CPE today, please respond to at least 3 of the 4 polling questions. And it looks like here are the results.
Great. So mixed results here, but overall, looks like most of you have had no findings, so that's great, but understand that findings do happen, so not uncommon to have some. So understanding a process versus a control, and this is important because as auditors, we are looking at the control, not the process. We want to see the control. So the process would be an action meant to do or record something. So what's the process of how vendor invoices are paid? They're sent to the program manager for review and approval, then it's sent to accounts payable to be recorded in the general ledger. So that's the process. What the auditors are going to be looking at is the control, and the control is an action meant to catch a big mistake or non-compliance. So the control would be that the program manager reviews and approves to verify that those vendor services were performed and that the services are an allowable cost. So I want to point out the allowability point there because the person approving those invoices needs to be knowledgeable of the grant to make sure that they can fully understand if that expense is allowable. As I mentioned before, we always want to see that that approval is evidenced by initials, either on the invoice or whatever your specific process is. And again, always like to see the date there as well. Again, here, if the process is a reconciliation, the control would be that it's reviewed with a sign-off and dated. If you're posting a journal entry as the process, then that journal entry would be initialed with, again, approval documentation. If you're entering effort allocation, meaning I spent 10 hours on this grant, here's my time card, there needs to be a back-end review of that time card or an actual effort allocation where I sign and say, yes, I spent 10% of my time to the award. Okay, what's the review of that? So it would be someone signing off on that. A physical count of equipment, what's the control to make sure that that actually reconciles back to your general ledger, as well as what's actually occurring during the count. So oftentimes if you're doing a count, you're going to have multiple team members involved in that process. A few internal control best practices. Written policies and procedures is a formal documentation of your policies and procedures. This is what us as auditors will go back to during our testing. We will look at those written policies and procedures to determine if you are following them. It helps us understand if it's allowable and if the control is being followed. Written standards of conduct, including conflict of interest policies. This is a specific compliance requirement. Risk-based due diligence, this would be something that you perform internally based on what you consider a little more high risk. So maybe your subrecipient has had issues in the past. You identify that as higher risk, and so you perform some due diligence prior to the audit starting. Similarly, some risk-based compliance monitoring, again, maybe your own kind of internal audit of that award. And this will, again, help identify issues prior to the audit starting. Will also, if you identify something as a higher risk of fraud, then you apply some of your own internal controls to monitor that area. And lastly, record maintenance and retention. Generally, you want to be holding on to these documentation or the documentation for 5 years after all funds are expended. So major program determination, a few highlights on here. With that COVID-19 funding, this has to be specifically identified on your CFA. So you would start that line item with COVID-19. This is required on your CFA and the data collection form. And some of those programs that are identified as COVID-19 are identified as higher risk in the compliance supplement, which means in most instances, the auditors must test those expenditures. So be aware of that if you have COVID-19 funding, even if you're under the specific threshold, if it's identified as higher risk, you will still have to be audited for that program. There are programs that are considered a cluster where there's several different awards that get grouped together and it's considered a cluster. So the auditor would be looking at the entire cluster, not just one specific program. Identifying subrecipients versus beneficiaries or versus vendors. Make sure that the documentation is clear on what type of entity, I guess you could say, that they are. Is it a subrecipient, is it a beneficiary, or is it a vendor? If you're not sure, you should be asking who passed it through to you to clarify. As a reminder, there were some extensions for data collection form submissions due to the pandemic, so be aware that prior forms may not actually be officially accepted at this time because of those extensions. And then, as I mentioned, identifying COVID-19 funding. Single audit reporting, is it complete? A couple items that I wanted to just note that I think most of these have already been covered, but if you have findings, you do have to submit a corrective action plan. This is required to be on your letterhead. So if you have findings, you have to actually prepare a final response to those. And then if there are any repeat findings, those are specifically identified as well. So jumping a little bit more into the procurement that I've been talking about. So this is referred to as the procurement claw. And so as I mentioned, depending on the dollar threshold that the purchase is, you have to follow very specific rules on how to go about that purchase. So the first clause is the micro purchase. So this is anything that does not exceed $10,000. When it's under that threshold, no rate quotations are required, but you do want to make sure that there's equitable distribution among contractors. The next clause is the small purchase procedures, or more commonly referred to as the simplified acquisition threshold. This is from $10,000 to $250,000. At this point, rate quotations must be obtained. The compliance supplement does not say what a reasonable number is, so internally you need to determine what that would be. And there's no price or cost analysis with small purchase procedures. Next is sealed bids for $250,000 or more related to construction projects. And then you also have competitive proposals for $250,000 or more. And this would actually be a formal request for proposal process where you have to evaluate the different submissions and make a formal decision on who to choose there. And reminder that the price is a major factor here. And then the last clause is called sole source. This is a very isolated situation either there's a public emergency or it's authorized by the federal agency to be a sole source. This we probably don't see very often, so this would be a limited instance that you would be using sole source. Suspension and debarment, just a quick note here that you do need to be checking vendors over $25,000 against the suspended and debarred list to make sure that the federal government is okay with you spending money with those types of vendors, and again, to document that you did do this search. Subrecipient monitoring considerations. Some important things to remember here is that you need to be reviewing the audit reports of your subrecipients to make sure that there weren't any findings. If there were findings, you need to be doing some fiduciary responsibility to make sure that those findings are corrected and having an understanding of the findings. Does it impact you now that since you passed that money through? You need to be evaluating the risk related to your subrecipients. You need to make sure that all of this is documented, that you have a signed agreement with the subrecipient. There's a lot of details behind subrecipient monitoring that if you are passing money through, you really want to make sure that you are taking the time to understand those compliance requirements and ensuring that your monitoring is happening and that it's, again, documented. That's the key. That's the piece that we see a lot of fall down, is that this subrecipient monitoring isn't actually documented. So direct costs, consistency treatment is essential here. You want to make sure that you're consistently reporting costs as either direct costs or indirect costs. You don't want to be crossing over there. You need to be assessing by the project and not just by the type of cost. And then allocation to multiple projects is okay, but make sure that you have documented how that allocation occurs, and again, that there was a review and control over that allocation, and also making sure that it's not being what we call double dipped, where it's being charged multiple times. So if you are allocating, again, making sure that it's not hitting multiple programs. Here's a listing of some unallowable costs that are almost always unallowable. You'll see here the alcoholic beverages that Matt's been referring to, but also losses, fines, and penalties, bad debt expense, interest on borrowings, organizational costs, lobbying, fundraising costs. So this is just a list of some of the high-level, more common areas that we see as unallowable, but again, you'll need to be referring back to your specific award to verify exactly what would be unallowable. And next is our last polling question.
Great, thanks, Hilary. After attending this web event, do you feel you are ready for an audit? A, yes. B, no. C, almost there. D, I'm not sure, but will likely need more help to get ready. Again, to submit your questions, please respond by clicking the button next to the answer you choose and hit submit. For those of you who would like a copy of today's slides, you can download them from the folder that says slide deck and handouts. We will be sending the slides via email tomorrow, along with a recording of the webcast. We'll give it a few more seconds here for everyone to submit their answers. And here are the results. Back to you, Hilary.
Great, thank you. Oh, good, almost there. I'll be ready by our scheduled audit. Always love to see that, and many yeses. So just wrapping up, thank you everyone for joining. Here are a few key takeaways. If there are any questions that we weren't able to get to, we'll be sure to follow back up on email, or if you want to reach out, again, you have our contact information. We're here to help on a variety of topics, so please don't hesitate to reach out with any questions.
Fantastic. Thank you, Hilary and Matt, for a great presentation today. If you met all CPE requirements, your certificate will be available to download now in the CPE progress window. A copy will be emailed within 2 weeks, and should you have any trouble downloading it now. And finally, Here is a link to the online survey for today's presentation. Thank you for joining our webcast, and we hope you'll join us again next time. Take care, everyone.